Hi everybody, this is Craig at Max Trading, and it's good to welcome traders into our room, really from all around the world today. And our thanks goes to each of you for participating, and also to those who will watch the video playback. We do appreciate your interest and your time, whether it's by attending live or later by video. I see we have some Max members in the room today as well. Always nice to see you, and we really do appreciate your support at these webinars. I believe there are several things that, as a trader, you need to know about Max Trading before you trust your account to it. Some of these things you can see for yourself. For example, you need to know that Max methods work productively in the live real-time market. You need to know that Max risk management will aggressively protect your account and allow it to grow. And you need to know that Max entries and exits are timely and profitable. These are things that you can see and see for yourself because we invite you to watch us trading the live charts in real time. You may have attended a past event, or you may be planning to attend one of the two upcoming events. And either way, you get opportunity to really see the system live and in real time and to know that it works. Others watch the video, and everyone gets to see the Max methods producing gains in real time and protecting the account with truly superior risk management. And these are important things that you can see for yourself. But there are other things that you cannot see until you are actually in training with us. At this moment, you cannot see that you have an opportunity to train with men of integrity, men who mean what they say and who follow through, men who teach what they trade. You can't see that right now. You cannot see that you can train with men who are passionate about helping other traders become successful. You cannot see that these are men of patience who will help you and help you again and again and again until you understand some point that perhaps has been difficult for you. You cannot see that they will answer every question you may have during your training, a week after your training, a month after your training, even a year or 5 years after your training, because you'll receive our never-ending support. Your access to your instructor never ends, and all of this is yours as a Max member when you join one of our training courses. And what you cannot see is just as important as what you can see. Whatever your trading goals might be, we do look forward to helping you achieve them, and I believe you'll be very pleased to find an authentic trading education that provides a reliable method of trading, along with the flexibility to use any time frame and trade whatever market you prefer. You'll hear from us that trading is hard and that learning to trade successfully requires a lot of work, and this is true. However, don't let that scare you. The results are more than worth the effort, and Max can be learned by anyone of average intelligence. All you need is someone to teach you the methods and patiently lead you down the path to success. We want you to be fully informed and to have opportunity to know as much as possible about Max Trading. So please take advantage of us. Don't hesitate to ask questions anytime during the presentation. Just use that question area in your GoToWebinar panel. We'll also have a Q&A session following today's presentation. We're going to stay just as long as needed so that every question gets an answer. Also, during that question time, I'll give away a free Max course, and that will be our door prize for today. It's just simply to say thanks for attending. Thank you for your time. And of course, you must be present in the room at the time of the drawing. So I hope you can stick around, and I hope you're a winner. Also, in a few hours, I'll be sending you an email with a link to the video playback of this webinar. That email will also give you information on how to register to receive the weekly Max price levels for your charts. These levels are very, very helpful, and you'll learn more about that in the coming days, so please do watch for that email. First up today is Eusebio. He will give us an overview of the entire max trading methodology. Eusebio is a phenomenal trader and a skilled teacher, and I assure you there is no one better suited to introduce you to max trading. Thank you so much, Eusebio. We appreciate you sharing part of your weekend with us, and I'll give the microphone over to you.
Thanks, Craig. And so welcome to everyone in this Max presentation. So I see indeed some Max graduates. It's always a pleasure for me to see that you are returning to our presentations. So I hope you are seeing my screen and you are hearing me well. Would you like to type a yes or a Y in the question area if everything is good on your side? Oh, fast reaction, I like that. A lot of yes. Winston, Mike, Sean, John, Gary, Robert, Stephen, and on and on and on. Okay, thank you very much. And Jan on our private. Constantine, nice to see you again. Well, so before explaining what the max is and presenting some examples of trade with the max, allow me to give you a small background of who I am. You have most probably realizing that with my accent, my bad English accent, I'm not a US citizen or an English citizen. I am in fact a Belgian trader, and I share my life between France and Belgium, and very, very soon now full-time in France. I'm relocating in France. So so I am a full-time trader with the max. Full-time trader with the max since 2008, and a part-time trader in many other markets for more than 30 years. In fact, I have begun as many traders with the stock market, then the options market, then naturally the futures market, and I have since 2000 begun to specialize in the currency market with the Forex market. And I am a past software engineer, and I have had the opportunity during the last 15 years of my career in this IT industry to work with banks in Europe, important banks in Europe, which has given me the opportunity through several projects to be in contact with bank traders and to learn some of their tactics in trading and how they consider analyzing the events around the world, planned events or non-planned events, in order to move the market in the way they need to move it for them to achieve their objectives. And so some of these concepts are including in the max, not in every level of the max. As I will explain later, we have several levels of the max. But in the upper level of the max, we include some of these concepts. And so what I'm going to present today is general concept of the max. I will then illustrate them also with some max trades example, and I will talk a little bit about the money management and the trade risk management we have with the max. And then I will give the mic to Chris, who will complement my presentations. So some historical fact. In fact, the max has been created many years ago by late Dr. Jim Pruitt, called with affection by his student as Tiger, because of a very strong temperament, but strong temperament because he was a strong man with heavy education in finance and trading, but also because he knew he had no time enough to share all his experience and all his knowledge about trading. His aim was to give the traders, his students, a very powerful but also reliable and flexible trading method. And I like to use the term method instead of system, because as I will explain later, the max is not based on fixed rigid rules, but it is based on concept which allows to adapt the rules to the market conditions. And understanding the market conditions is a key point in order to become successful and consistently successful in trading. Craig has mentioned that the max is not a simple system, or he has mentioned that trading is complex, and indeed trading is difficult. There are two important keys we have to achieve in order to be successful with any serious trading system: work and commitment. commitment. Work because it represents a lot of elements to assimilate, to understand, and then to apply. And so practice also is important too. And commitment. Of course, we trade to make money, but if money is the only reason to learn to trade, believe me, this is not the good way for the success. We need, in order to become successful, a way stronger commitment, in fact, because money is always a tool we can use to achieve other objectives in our life. Money is not an objective by itself, in fact. So a stronger commitment is important, and each trader must think about the objectives in his or her life. There are also other skills to achieve, to develop in order to be successful: discipline, patience, persistence, concentration, and confidence. Discipline. I have said that the max is made of concepts and rules. And so if we have to apply rules, discipline means that we never deviate from these rules. There are, however, some discretionary situations we explain also in one of our max courses, but we explain that aspect in a way to eliminate any subjectivity in the concept of discretionary situations. Patience. A rule, in fact, when we have to apply a rule in the market, either to open a trade opportunity or to close a trade, a rule represents always a set of conditions which must be matched in order to observe that situation. And so as long as all these conditions are not fulfilled, we have to wait. We step aside and we wait. We are paid by waiting, in fact, in trading. And so patience until all the conditions are fulfilled is an essential condition to be successful too. Persistence. Persistence is also another aspect of success. I'm seeing for many years now many traders jumping from one system to another system after perhaps 2 or 3 or 4 losing trade in a row. Doing so is not the way to succeed, but it's also ignoring simple facts in trading. If you consider a trading system with, for example, a 70 or an 80% winning rate, even if the winning rate is not a criteria which is enough to define the quality of the trading system, I will mention that later, you need to know that even with such a high winning rate, you may still face losing streaks made of 4 to 10 losing trades in a row. And so 10 losing trades in a row, if you apply your rules correctly, is statistically normal. And so if you jump to another system after 3 losing trades in a row, you are ignoring this fact, in fact. And so persistence is so very important, which also means that the trade risk management and the money management are also essential elements of any trading system. Concentration. Concentration is also important. The max is made of many details, and in order to never miss these details, sometimes one detail makes a difference in a trade result. We need to stay focused on the trade we are handling, whatever the time frame we are using. And so, personally, myself, when I'm trading, I close my TV set, I close my radio, I don't read newspapers, I don't answer the phones, and so on and so on. I stay concentrated. I don't surf on other websites, and so on and so on. I stay concentrated on my chart. And confidence. Confidence is also one of the important elements in trading, because after all, the trading activity can also be summarized as a psychological game or activity. And in order to overcome the psychological problems, several levels of confidence must be built for the trader. First of all, the confidence in the market. When we scroll through charts, whatever the pair we want to trade, whatever the time frame we want to trade, we see that time after time after time after time, the market gives us a lot of opportunities, more than we can ever handle. Then we need to build also confidence in the trading system, in its ability to catch many of the opportunities the market can offer to us, and then build confidence in ourselves, in our ability to apply correctly the trading method. And so this comes for all these 3 levels by practicing and practicing and practicing. Even after having traded the max for almost 10 years now, I still continue to practice myself when I need to practice, when I need to reinforce some detailed aspect in the max. And so practice is a useful way to build such kind of confidence. So what is the max? The max, in fact, is a term which is an acronym which stands for three important concepts. The M stands for momentum. Indeed, we will detect a potential opportunity, and I say a potential opportunity of a trade when we see that the price has enough momentum. Of course, it is important to understand why at some moment the price gains momentum. This is another aspect that I will mention later. So momentum and volatility. So we need to have enough momentum and volatility to have some guarantee that the movement we are seeing on our chart will last sometimes and give us an opportunity to trade. The A stands for acceleration. Acceleration doesn't mean here the price is accelerating, but while the trend is unfolding, we accelerate the profits we can extract from that trend by adding to our trade. And so progressively, we build a larger position by these scalings. Of course, doing that, we have to pay attention not to increase the risk of the position. And so the trade risk management is a very essential capital element of any trading system. The risk of the trade must be kept under strict control. And the X stands for exit. We have several types of exits, in fact, through our exit rules. And at some point, indeed, we have to close the trade. Along the trade, we will sometimes close a partial portion of the trade. We call that scale out. So we have scale-ins and scale out. And at some point, when we see that the movement we are trading is exhausting, we will make a final close of the trade until the next trade opportunity will appear in the same direction or in the opposite direction. And so in that sense, the max is essentially a trend following method. In another level of the max, so I have said we have 5 levels of the max. In one of them, the 4th level, in fact, which is called the max advanced level, we also teach how to trade counter-trend direction and how to trade also some types of consolidation area when the opportunity are present. I have said, I have mentioned a moment ago with the acceleration technique that we have a strict risk management rules to keep the risk of each trade under control, but we have also money management rules in order to control the way we can either grow the account, the trading account, when we are facing favorable conditions in the market, or how to control the drawdown while we are facing more difficult, very challenging market conditions. And sometimes we have such kind of market conditions. And so controlling the drawdown is very, very important. And we have ways to control these drawdowns. And we have even an ultimate way to control, to have a strict control of the drawdowns. We can guarantee in our trading process that we will never go over a predefined maximum drawdown. And so as Craig has mentioned, so the max can be applied in any time frame and in any market. It is also important to understand what the max is not. The max is not a scalping method. I consider the scalping method is the most difficult way to trade, but it is just a personal opinion. I know there are many traders scalping the market. Some are certainly profitable. Personally, I consider it is the riskiest way to trade. We are not interested with the max to capture a few pips in the shortest period of time. We want to exploit entire trends which appears regularly enough in the time frame we are trading. The max is not a news trading method. It is very tempting when we have a big surprise in a news release to try to catch these large spikes the price is doing. If you have experience in such kind of trading, you know that you almost always get very bad price execution due to the nature of the movements in the market when there is a news release with a surprise. However, trading a news release after the release of the news is possible, of course, because in some circumstances, that news release can create a trend in one direction or in the other direction. And the MAX, as I have already said, is not an elementary buy-sell system. We have to adjust to the market conditions. And so before seeing some example with a chart, in fact, we will consider a trend opportunity when an entry setup will appear. And an entry setups is always made of three kinds of conditions in the market. First of all, technical aspect. On our chart, we use technical indicators. We don't trade technical indicators. They are simply there. They are simply tools to make it easier and faster to see potential opportunities in the market. But these aspects are not the only kind of conditions we want to see to have an entry setup. We want also to see conditions related to the risk of the trade being fulfilled. Not all the entry setups are made equal. Some are less risky, some are more risky. Some have the appropriate risk to consider to trade that setup, and so the risk conditions are also an important aspect in trading. And then this is what I consider the most important aspect in trading, the global context. What are the factors driving the market at any moment, whatever the time frame we are trading? Among the global context, we have elements like the news release, for example, some timing aspect. In the timing aspect, we have, for example, the opening of the important sessions like the European session or the London session, the US sessions. We have also some other what we consider and call a critical time period during the day, when we know that the professional traders, I call them the big boys, have specific actions in the market in order to continue moving the market in one direction or to reverse the market because they want to take, for example, some partial profits from the market. And so we will have an entry setup only if all these conditions are fulfilled. If one of them is not fulfilled, then we simply don't trade. We wait for the next opportunity. And so you can see that the technical aspects or the fact that we use technical indicators is not the most important aspect in trading. On the other side of the trade, we have the exit setups. And we consider that an exit setup represents a set of conditions telling us that at the point the trade has developed, now we are reaching risky situations. And so again, for the exit setup, we will use, for example, some of our technical indicators, but we will use also some behaviors of the pure price action. We will use also combinations of technicals and price action. We will use also technical aspect. We have also the concept of the movement invalidation. And so all these concepts defines a set of exit rules telling us that when the corresponding conditions are fulfilled, now we have a risk appearing, a serious risk appearing for our trade, and it's time to consider either to reduce the risk on the position or to bank some profits or to close the trade until a next trade opportunity will appear. And so this is, in fact, the most difficult aspect of the MAX. It's to understand all these subtleties we have in our trading methodology. So let me give you now some examples of recent and past trade. I will use them also to explain some of the other concepts we have in the MAX. Let me take here my red hotspot. It will be easier to show you on the chart what is happening. So the two first level of the MAX we are using are called the MAX Primer and the MAX Lite. The MAX Primer is a very, very basic level of the MAX. It defines just two entry setups, two exit setups, and it represents the elementary level of our MAX methodology, but it helps you also to have a good idea of what the max may be, what the possibilities of the max are, and who we are when we teach you the max primer. The max light is a little more elaborated version of the max primer. Let me explain now some of the concepts we have in these two levels of the max. You can see on the chart the price is evolving around a long-term moving average here, which is even a channel. We call that channel our home base because you know that the price moves around each side of that long-term moving average. And then we have three other shorter-term moving average. We have a red and a blue balance line. We have a momentum line, which is our gold line here. And we use them to define the quality of the trend we are trading. We like to see, for example, when the three EMAs... Oh, there is some mic which is open. Chris, perhaps it is you or Craig. Can you close your mic, please? Okay, thanks. So we use them essentially to define the quality of the movement in terms of trend we are doing. So they are part of the tools we are using to define the market conditions. I will explain a little more in a detail. And so here I would like to illustrate two kinds of, or three kinds of trade we have along that movement. And so we call a trend a movement on one side of our long-term moving average, our home base. And here with the max primer, we have two trades. They are noted in yellow, and whenever we have a set of conditions defining an entry setup, it was the case here, and that set of conditions has a specific name, so we have several names for our conditions. Each name represents an entry setup. So here the entry setup was what we call a REMO, a trend resumption, in fact, because that trend has started way before 1 or 2 days before that up movement here. And so whenever we open a trade, we consider the trade is made of 2 units. Of course, we explain, we teach how to calculate the size of these 2 units with our position sizing concept, which takes into account not only the stop loss we fix for the trade, we have rules how to place the initial stop loss of the trade, and the percentage of the account we accept to risk on the trade. It may be, for example, 1% or 2% of the trading account. And then we let the price move, possibly in our direction, like here. And at this point, we have a set of rules telling us that now we have a risk, a potential risk for our trade. And that set of conditions define an exit rule allowing us to make what we call a momentum exit, represented by an MX. It is equivalent to a scale out. And whenever we make a scale out, we close 1 unit. So we close half of our trade. And we keep 1 open unit running until we have another exit condition. That additional exit condition appeared here, where we closed the remaining open unit, and that final close of the trade, we always call it an XXX. XXX means a final close. Along the trade, of course, we adjust our stop loss in order to reduce also the maximum risk on the trade. We call the stop loss an ESL, which means an emergency stop loss. The emergency stop loss is present on our trade. It's always a hard stop loss, by the way, in order not to protect the trade, but mainly to protect our trading account. Because you know that when you trade, you may have a technological problem. For example, your internet connection can fall down. What do you do in such a case? Will you have time enough to reach your broker, to contact your broker? If your phone is connected with your internet provider, you will have perhaps some difficulties to contact your broker. And so we want the account being protected with our emergency stop loss. Of course, we will adjust the stop loss along the trade. But the idea is, as long as we never have a technological problem in trading, we never let the price hit our emergency stop loss. We have other techniques to close the trade, and you see one example here. Later on, during the same day, the trend resumed to the upward, and we get another entry condition. All the conditions were fulfilled to take another trade. And then we have opened another trade with 2 units. Later on, we perceived here a risk for the trade and allowing us to close 1 unit, and then the price returns reversed against the trade, and at this point we had conditions to close the trade. The second unit in this case has been closed with a loss, a small loss. You can see the result of the two trades here. The first trade has made a total number of pips for the 2 units of 33 pips, and because the initial stop loss was 40 pips, the reward to risk ratio is just a little less than 1/2 R. R is the initial risk we take on the trade. We like to use the Von Tarp notation because 0.41 represents the reward to risk ratio. And if we know the risk we take on the trade, for example, a 2% risk, this means that this trade has provided a financial reward to risk ratio of 2% times 0.41 or 0.82%. And the second trade, you see similar, a small one because the price was already at the extreme of its movement. You can see here a red rectangles. It is a rectangle which is, we call, our students call it the red magic box. And in fact, in some circumstances, when we have some specific conditions fulfilled by the trend we are trading, this red magic box represents a time period when we have 75% probability for the trend we are trading to exhaust. 75%, and sometimes the trend exhausts before, and sometimes the trend exhausts after that red magic box. With the Max Primer, in fact, the Max Primer includes all the rules and concepts of the Max, the Max Lite includes everything of the Max Primer, plus additional entry and exit setups. An example here of an additional trade with the Max Lite is indicated here in white. We had the two same trade as noted in yellow here, of course, and this specific entry setup is called a re-entry, which means a trend continuation. We make the distinction between a trend continuation and a trend resumption, but the trade is handled the same way based on the trade risk management. So here, as soon as we perceive a potential risk for the trade, we reduce the risk, and in this case, reducing the risk corresponds to banking some profit. So we close 1 unit with a profit, and then later on, we make our exit based on our exit techniques. And so you can see that in this case, this trade was the first one of the Max Lite. It has produced a nice 69 pips profit. And because the initial stop loss was 46 pips, so it has produced a reward to risk ratio of 3/4 of 1 R. And so you can see the total result for the trade during that up movement, and we call an uptrend. We will call a trend an uptrend when it moves above our home base channel, and a downtrend when it moves below the home base channel. This is the general definition. The definition is much more elaborated. This is not, for example, a downtrend. And we have, and the proposal we will make to you later concern the Max Primer, but also what we call the Max Standard. The Max Standard and the Max Advance are the next levels of the Max, which are way more elaborated. And I'm showing here the same movement as previously, but traded this time with respectively the Max Standard as indicated in yellow and the Max Advance as indicated in white. Let me explain first of all the Max Standard. You can recognize here the re-entry we had with the Max Lite previously. And then we make the same MX, because we have the same risk, of course, but later on here, and this is the big difference with the Max Primer and Max Lite, we had an opportunity, a valid opportunity, to add to our initial trade. And adding to a trade is called a scaling. And whenever we make a scaling to our trade, we add 2 units, the two same units in terms of size as the initial entry here for the re-entry. And then later on, we make another scale out, here, the MX number 2, and then another scale in, and then another scale out, and then another scale in, and then a scale out, and finally, our final exit, which may be different from the exit of the 2 previous levels of the Max, because with the Max Standard and the Max Advance, we have more elaborated exit techniques. In particular, you can see here that this exit, which is made on the red candle, is almost an optimal exit, almost on the top of almost at the high of this top, in fact. And of course, along the trade, in order to control the risk on that position, because the risk may increase with each scaling, it will decrease with each MX, of course, but it's not necessarily enough. We have also, following the rules, we adjust our emergency stop loss along the trade in a very specific way. And so when we compare the result of this trade with the max standard to the max primer and the max light, in fact, this larger movement, giving one max standard trade, has produced 251 pips thanks to the scalings, and representing a 2.73 R as a reward to risk ratio. Now we have also an upper level of the max using more advanced concept, where we consider also the market as a global market. We can compare several pairs between them. We consider more in detail what the news release may have as a deep impact in the market. We are much more interested to what the big boss are really doing in the market. And so these more advanced concepts allows to catch larger movement and to consider also the counter trend portion of a movement. Here, when the price is moving below the home base, that movement can be a downtrend, but not necessarily. And when the price is going toward the home base here, or in this case, we call that kind of movement a counter trend trade. We can trade with the max advance this kind of counter trend movement. And in this example, the entire movement was all that movement here, allowing us to open the trade in this area. And the specific setup we have, which represent, I repeat, a specific set of conditions made of technicals, made on risk consideration, and made on the global context, is called a primo. Mo means a momentum entry. Okay, so a primo, an entry before a momentum entry. A momentum entry, potential momentum entry, is always an entry around our gold line here, which is called the momentum line. So we have also an initial stop loss, and we have, of course, exactly the same steps as in the max standard. All the setups of the max standard are setups of the max advanced, but we may have additional advanced setup. For example, here we have an advanced way to make a scale-in, and then here also an advanced way to make another scale-in. So there are several types of scale-in we can consider. And that earlier entry, with these two additional scaling, so just 3 additional decisions in the trade, but also a smaller initial stop loss, you can understand that these 2 types of element will increase the result, the reward to risk ratio of the trade, but in a very important way. Look here, that trade has made a total of 883 pips, representing a reward to risk ratio of more than 12 R. Almost 5 times the result of the trade by just these 3 additional decisions along the movement. So this was an example in a pair I like to trade, like the pound Aussie in the 5-minute time frame. We like to trade the small time frame, but I will show also examples with higher time frames. We have a lot of max traders using higher time frame, the 4-hour time frame, the 8 hours, the 12 hours. I like also to trade the daily time frames. So here an example of down movement with the pound yen in this case. Again, similar trade with the max primer and the max light. In this down movement, during the European session, the max primer has given only 1 trade. We can see here the steps of the trade. We have a REMO here, a trend resumption, a partial exit, a momentum exit, and then the final exit, giving a profitable trade, a small trade, but a profitable trade. We have around 75% winning trade with the max. And we have around 15% losing trade, 15 and 10% break-even trade. When we have a winning trade with either the max primer or the max light, the reward to risk ratio on average is between half R and 1 R. And when we have a losing trade, I will show in a moment an example of a losing trade, the average loss is around 0.4, 0.5 R. So the profits, even with the max primer and the max light, are larger than the losses, which is very important. And of course, with the max standard and max advance, we have way larger profitable trade than losing trades. With the max light, we had the opportunity to make 3 trades. So the first trade as the max primer, but also 2 other trades which are similar to the example I have given previously with 2 re-entries. And we have the same mechanism, an initial entry, initial stop loss, of course. Along the movement, we have at some point a partial momentum exit, and then we have a final exit. And you can see the type of result we get. So more than 1.15 R for the 3 trades. With a risk of 2%, this represents a 2.3% profit for the day on that pair. Here in this example, I would like to mention one kind of exit techniques we have and you can use in your own trading system. You see this red candle here. This red candle is what we call a long bar. A long bar is always a bar having a length, and the length is measured from the low to the high, so wicks included. So having a length which is 2 times or more larger than the average length of the previous candles. We have a movement here made of several candles, and when we consider the average length of these candles, we compare that average length to the length of our long bar here, and if the long bar has a length twice or more the average length, it is considered as a long bar. And a long bar in the direction of the trade, look here, another long bar, look here, a long bar, we always consider that long bar as a nice opportunity to bank some profit. Because very often, when we have a long bar, the price makes a retracement. Not always, of course. It was the case here. It was the case here, a small retracement. But here, you can see the price has continued in the same direction as the long bar. But if the price does not retrace, of course, we don't take a profit. But if the price retraces somewhat, and we explain when we can make a momentum exit, we bank some profit. And so we like to explain that kind of exit rules because this is something you can use every time in any trading system. We also like to use, as I have said previously, indicators to define exit techniques or to pinpoint in a movement when we have some risk for the trade. And one of the exit techniques we like to use is when we have, for example, a divergence. In this example, we have lower lows in the price, but we have higher lows in our oscillator, which is the stochastic of the RSI. The same movement now with the max standard and the max advanced gives the following results. So again, in yellow, you have here a breakout Remo, so a Remo essentially, an MX, a scale-in, an MX, a scale-in, an MX, a scale-in. You see the same MX with the long bar as previously, an MX, a scale-in, MX, scale-in, MX, and here an XXX. We explain how we can make such an XXX very often, not always, very often at the end of a movement. We have techniques for that. And so you can see here with all these decisions, so 4 scale-in, 5 scale-out, and 1 final exit, a nice 3.75 R for the reward to risk ratio, to be compared to these 0.23 and 1.15 R of the max primer and the max light. The same movement with the max advanced. In this case, the max advance has allowed to make only 1 additional scaling here, starting at the same point. That only additional scaling, you will see that on the result it will produce a nice difference. Instead of making 300 profit with the max standard, we make here 460 pips profit. With the same stop loss, by the way, because we have the same entry, representing more than 5, almost 6 R profit, almost the double result of the max standard, and way higher, way larger than the result of the max primer and the max light. And so today, with Chris and Craig, so we will make the levels we will propose to you today will be so the max primer and the max standard. Over time, we always improve we refine our techniques, and 2 or 3 years ago, we have introduced a 5th level of the max. I will just illustrate quickly, because when we see the market are changing, it's important to adapt to the market change. even when we have very challenging market conditions. And so we have developed what we call the max ETF level of the max. So we have two sub-level, the max ETF and the max ETF, the max SAM ETF. I will not describe the SAM aspect, I will only describe the max ETF. And so what we have made in terms of improvement of the max methodology is to make a generalization of the concept of trends into momentum, directional movement, allowing in fact to recombine what could be a counter-trend movement and a trend movement. Here in yellow, in that yellow box, I represent the movement I have shown previously on my previous slide. So it was that movement starting with the breakout Remo and ending with the XXX. So it's represented here in that yellow box. And with the max ETF, we are able in fact to consider as a unique movement all that movement here. Starting earlier here in the counter-trend portion of the movement and ending of course in the same place. But now because we have a larger movement, and provided we have margin enough, of course. So this may be a small problem in USA and Canada, but we can always restrict some aspect in trading. Because we are able to initiate our trade way earlier, and so to make many more decisions in terms of scale-ins and scale-out, the difference with the max standard and the max advance will be way, way different. Remember, with the max standard, we have made a 3.75 R, with the max advance a 5.75 R result. Now, because we have been able to open the trade earlier and to make several additional decisions along the same movement, look here, the result was an outstanding 1,177 pips for a reward to risk ratio of 29 Rs. Now, of course, this kind of movement does not happen every day, of course. On average, for each pair, in a small time frame like the 5 and the 15-minute time frame, you will be able to get such kind of movement on average 2 times per week. Sometimes 3 times per week, sometimes less, sometimes more. It depends on the market conditions. But most of the time, you will have larger movement, not with so many decisions, not with so many scale-ins or MX, but you will still get nice reward to risk ratio, larger than 5 or sometimes even larger than 10 Rs. So you can count on at least 2 on average, 2 or 3 per pair per week, which gives enough opportunity to trade. So it was just to mention that from time to time we are refining the way we consider to trade a movement when, of course, we understand also the global context providing that kind of movement. I have said that with the max we can also trade other instruments, other market and other time frame. This is an example of a trade on the silver. I could have taken the gold, for example, or oil, crude oil, in the 4-hour time frame. And if you make abstraction, in fact, of the instrument and you consider only the movement and the structure of the movement, you will have exactly the same kinds of decision. An initial entry here or here, depending on the level of the max we are using, and then depending on the conditions, we may have a scale out or a scale in, and then at some point we will have a final exit for the trade. And so you can see the difference between the two levels here of the max standard, max advance in this example. An example in the daily time frame with the euro US dollar here, exactly the same structure. The time frame doesn't matter, the instrument doesn't matter, but in this case I'm illustrating a trade made with the max ETF and all the concept of the max standard and the max advance. And so you see the structure of the trade is exactly the same: an initial entry, scale in, scale out, scale out, scale out here, scale in, depending on what the market is showing to us, and then a final exit here. You can note that the final exit here is not at the bottom. We never try to catch the highest high and the lowest low of a down movement, or the lowest low and the highest high of an up movement, but we try to be as close as possible. This is an example of what we call a movement invalidation exit. This is a typical example when the price makes some types of reversal, and we explain that in great detail in all the levels of the course. And particularly this example of trade has produced a nice 7,500 pips. Don't forget, it is the daily time frame, so the number of pips is always larger, but we have also a larger stop loss. But the reward to risk ratio in this case was nice enough, almost 15 hours, so in 65 trading days, so approximately 3 months for that trade, position trade. I have said that we have around 15% losing trade, and whenever we have a losing trade, the loss is always a small one. This is a typical loss we have with the max. So at some point in this uptrend, we get an entry setup, so an opportunity to open a long trade, and so we open the long trade with its initial stop loss here. We open 2 units for the trade, and then immediately after, and this is a situation many of us have already faced, and so the price reversed immediately in the opposite direction. And at some point, while the price was going downwards against the trade, we have at some point a set of conditions telling us that we have to close one unit, and this is why we have closed the unit at this level. It is not, by the way, on the more line. It is just a pure coincidence here, okay? And then the price continued to go against the trade. And at some point, this is again an example of a movement invalidation situation. We close the second unit before the price has a chance to reach our emergency stop loss. And so this was a losing trade. The 2 units are making a loss. And when we check the result of the trade, we see that the trade has lost 41 pips for a negative reward to risk ratio, of course, because it is a loss of minus 0.44 to 1 or 0.44 R. So this means that the loss was right on line with the average loss we have with our max trading system, whatever the level of the max. Of course, you could have told me, yes, but here in this case, the price has never reached your emergency stop loss and reversed, and you could have made a profit from that trade. Yes, but consider in real time, we never know. We are seeing the price is moving downward. We achieved here a situation, a position in the price movement when the conditions for the trade, the movement invalidation was achieved, and so we had to follow the rules and to close the trade. When the price reversed the upward, and there is a possibility for the movement to give us another long trade opportunity, and this is what we will do. If we have another opportunity to open a trade, we will open another trade, forgetting the result of the previous trade. We never consider the result of a previous trade or previous trades to influence the way to handle future trades. Each trade is made independently. Eventually, what we can do is, and this is what I teach in the Max Advanced course, is how can we adjust the risk for each trade after losing trades in order to be guaranteed to never exceed a specific predefined maximum drawdown. So you can see a losing trade will always produce a small loss, and we have many more losing trades than losing trades. When I have said that we have to take into account the different market conditions, this is an example when we had no trade. In fact, we represent the market conditions for the pair we are trading in different ways. We consider what is a trend mode, what is a counter trend mode, what is a consolidation zone mode, for which we have to make the distinction between a tight one and a large one. Both are not handled the same way. And we have the choppy mode. A choppy mode is seen as a market condition which is extremely difficult to trade. Why? If you observe what is happening on this chart, you can see that the price very often will make fast pushes upward, followed by as fast pushes to the downside. And if you have a global picture of what the price is doing, if you are in your chart, in your trading session, if you are at this moment, for example, if you observe what the price was doing here, you can see that the price has a complete erratic behavior. And so we define in the max courses, in all the level of the max, what are all the conditions telling us what a choppy market is. And the beauty of these conditions is when the market is in a choppy mode, the valid entry setup are extremely rare. Most of the time we don't get a valid entry setup, and so we never trade that kind of situation. Now, from time to time, we have a valid entry setup appearing. And when we are in such a situation, we have the choice either to skip that setup, because after all they are rare, but we have also the choice to trade that setup, because we never know when the price will leave the choppy mode. It may be for the trade we are taking. And so we detail in our courses how to handle such trades in a choppy mode. And this is the mode, by the way, which is the most difficult to recognize by our students, and this requires some experience, some practice, and for that we have practice sessions we call the calling parties. Chris will describe them more in detail in a moment, helping our students to improve in the way they handle their trades. So I have spoken about the technical aspect of the max, the risk aspect of the max. Let me just explain some aspect of the money management. So when we consider the money management, this means how we handle our trading account in order to grow it or to master the drawdown. I will only describe what happens in favorable conditions. And so when we are in a favorable condition and everything goes fine, we can compound our result. The compounding effect is the most powerful behavior in the market to increase an account. And give me just a simple example. I will not go too long here. Let's start with, for example, a trading capital of $10,000. And we consider a risk of 2%. This means $200 for the first trade. And let's consider we trade the 5-minute time frame. In the 5-minute time frame, we'll have an emergency stop loss on average of around 30 pips. So let's consider 30 pips. Sometimes it may be smaller, sometimes it may be larger, but let's consider an average size of 30 pips. And let's consider we are able to make, with one or several trades, a total number of pips of 60 pips, representing, in fact, a 1R reward to risk ratio. Remember, each trade is made of 2 units. The total number of pips made by the 2 units by the trade is the number of pips made by each unit. So we have to divide that result by 2 in order to have the average result of the trade. So if we divide 60 by 2, we get 30. And when we divide 30, that average value, by the stop loss size, 30, we get the reward to risk ratio of the trade, which is 1 in this case. So 1 to 1, 1R. Or 2%, because the R, the risk, was 2%. And now let's see how the account can grow here when we make no withdrawal and when we get consistency in our trading. And so let's suppose we are able to make that result, that average result, 1R, which is very conservative with the max, every day. And so we can see that the trading account can grow progressively. And in particular, after 1 month of trading, the account will grow. 1 month, the account has grown by 50%. And this spreadsheet gives you also, and so on and so on. And so this spreadsheet gives you also an idea of the number of days which will be necessary to, in this case, to double the account. We can fix a financial objective, which will be to double the account. And in this case, if we are able to respect these conditions, I will come back in a moment, we will be able to double the account in 36 trading days or 2 months. So this means that even with a very conservative result, we can grow an account in a very nice way. However, don't get me wrong. Trading is difficult. And here I have made very strong assumptions. The most important assumptions, there are 2 types of assumptions. First of all, we will not be able to necessarily trade every day. And the second assumption is we will not necessarily be able to make that result every day. Some days we will make a bigger result, some days we will make that result, some days we will make a smaller result, and some days we will make a loss. And so globally, it will need perhaps a little more days to achieve the result. But if you achieve consistency in the way you apply the max, you will get your objective. Okay, this spreadsheet allows to consider any objective and consider what happens to the trading account when you make also periodic withdrawal. And we explain that in very detail in our course. The withdrawal is an important aspect in growing an account, because there is an aspect of risk we often neglect. It's the broker aspect. You never know what may happen with your broker. My broker is not my friend. I do not consider him as my friend. I consider him as a risk, an additional risk I have in my trading process, and so I have to apply measures to be protected from my broker, and so I make regularly withdrawal. Just to conclude my presentation here, so the max is organized in 5 levels. The max primer, the max light, the max standard, the max advanced, and the max SAM ETF. The presentation and the proposal we will make to you today concern the max primer and the max standard. And you can see what are the prerequisites to get each of these codes. The max primer requires no prerequisite. The max light requires the max primer. The max standard does not require any previous level. The student can go directly to the max standard. The max advanced requires the max standard, and the max SAM ETF requires the max standard, because we build each upper level on the previous levels. Okay, so just to conclude now, with the max at any level, you will have a trading methodology which is based on sound concept, and during the training session we explain why these concepts work in relationship with the big boys behavior most of the time. And we insist during our training session on several aspects. We use indicator, but we don't trade the indicator. The final decision is always given by the price action. We have an expression, price action always rules. And so we have also very solid trade risk management and money management. They are as important as the way to define an opportunity to open a trade and the conditions to close a trade. And so this is why we always focus first. Chris, please, can you close your mic, please? It's very disturbing. Thanks. So we have a strong focus on the trade risk management. The first priority of a max trader is always the trade risk. Once we are in a risk-free situation, then we can concentrate on the profits. And so we insist on, for that, through several types of activities we have, the coaching, the mentorship, the homework, Chris will speak a little more about that, the practice, and all the follow-up support with workshops, our forum, and our practice session. So, okay, I am here at the end of my presentation. Later, when Chris has presented his portion, we will answer your question, but I see that Chris and Craig has already answered, and so I have the pleasure now to give the mic to Chris. Chris, up to you.
Okay, thanks Eusebio. Can you hear me okay? It seems that, are you able, can you hear me? Can somebody type a yes in the chat so that I know that I'm transmitting? Thanks. Cheers. Thanks everybody. Whole pile just piled up. Yeah, I had some problems with my headphone, so thank you. Hi, I'm Chris. I'm based in New Zealand, and I've been a partner in the Max Trading System since 2008. Jim actually started, Jim Pruitt, this first course off in late 2007, and Eusebio and I were sort of one of the first ones in the second course. Craig was in the first. As you can see, we've done something like, well, this set of courses coming up is going to be our 54th set of courses. So we've been in this for quite some time. Lots of practice. And we've got coming up to about 1,900 members now. So well established. Next page, please, Eusebio. Thanks. One of the really important pieces about the Max is that we give you feedback on what you're doing. A lot of courses you get into will show you how to do stuff, but I found, and I see it over and over again when I'm marking people's homeworks and on myself as well, when you think that people can think that they've learned something, but they have it completely wrong, even though they think they've got it right. And it's only until you have feedback from some third-party person from the outside that knows what they're supposed to be doing that they can get corrected. And this is what the homework's about. It's not as a way of punishment or anything like that. So the really important thing is to make sure that you understand correctly. The other thing is that it stops the Max from being just another course that you buy and chuck in a drawer somewhere. We actually get you to sit down and go through charts so that the ideas that you see and hear on the screen become burnt into you, so you become an active participant. It crystallizes the training that we give you. So rather than just being an idea in your head that you think you can do until you actually sit in front of the chart, this becomes something, hey, I can do this, and this is the correct way of doing it. And once we've done the course and you've gone through all the homework and stuff, we still have a forum and practice sessions afterwards at no charge that you can come along to and say, hey, I didn't do this correctly, or these last 3 trades didn't work for me. Am I doing something wrong? Because what you may have found with trading so far is it can be like sitting in a dark room. I don't have a good analogy with this, but trying to catch something by sticking your hand out the window. And every now and then you grab something, which is great, and you don't know if you did it correctly or incorrectly. And other times you don't grab it, and you still don't know if you did it correctly or incorrectly. So what we do is we give you feedback and tell you if you're doing stuff correctly or not, or if it was the market, so that you're much better. Takes a lot of the pressure off you. Okay. The way we do it is everybody gets to see everybody else's homework. So it's one big pile goes into the room. And then as the instructor goes through and checks each person's homework off, the results are sent back. So next slide, please, Eusebio. Some people are a bit nervous about sending in their homework, but everybody else is nervous, so nobody really cares. And they don't know you anyway, so it doesn't matter. But here's an example of the homework. Generally, it's, we just ask people to mark up a chart with what they've learned so far. So for instance, on this chart here, it shows a breakout entry where the moving averages are and where the stop loss is placed. And we go through and check it, and then we add exits and other counter indications and all sorts of stuff to it to make sure that you understand. Every chart is different, so by having everybody else's homework there, you get to see lots of extra examples of what's actually going on and what can happen. And on the right-hand side is an example of what an instructor would reply to, or how they reply. Excuse me. So when I'm the instructor for the standard course, and when I'm going through this, generally I go through it bar by bar almost, unless there's nothing to say. So if the chart's good, it makes it really easy to mark. If it's not, then it's hard work, but you get really detailed replies on where things could have been better, things that you perhaps missed, things that you could have taken instead. So that's an example of what the homework and a reply looks like. Next page, please, Eusebio. Okay, Eusebio's spoken a lot about the different courses that we've got, and we're almost a trading university. The primer and the light courses are kind of evaluations for us. The standard is our flagship, and that's where you get all the money management side of things, all the scaling in techniques when there's a nice trend in place. And I do have to say that at the moment, well, up until the past couple of weeks, the markets have been quite flat. So if you've been trading and not doing too well on the smaller time frames, then generally this is because price has been going sideways mostly, with very small movements or sharp movements that have been really hard to capture. So sometimes it's not you, sometimes it's the market. Once the markets start trending more, and like I said, they've been very narrow ranges. Once they start trending, then the standard really kicks in. I know on our webpage we make the claim that we make 30% to 300% more than a regular system, and it's true. If you take the primer and the light and you say manage to get into something like, for instance, a 60-pip move, then with the standard, with this similar type of movement, and it depends on the movement and all sorts of stuff, but you should be able to make at least another 50% out of it just by having an extra scale in there. But you can't just willy-nilly keep adding orders to a trade. I've seen some expert advisors come out where you can add orders in every 10 pips or every 20 pips or something like that. That's really dangerous. It can increase your risk hugely. If price goes against you, you can really damage your account. And I kind of make a joke about it that we, while we advertise ourselves as a max trading course, a lot of the times it turns out to be a max not trading course, because we have a lot of conditions to make your trades a lot safer. So we won't get into trades if there's, for instance, a news event coming up, because that can damage your account if it goes against you. And there's a whole pile of other technical and indicator-based some of the things, and also just straight out global conditions that need to be met before you get into a trade. There are particular times of the day which are not good for getting into, and other times when if everything is set up correctly, then it's okay to enter the trade. So you have to be aware of all this. It's not just purely the moving averages have crossed, let's jump in. There's a whole, that's just the tip of the pyramid of a whole range of criteria that's required. Okay, enough of that. So what we've got on offer today is the standard with all the bells and whistles, and the evaluation course, the primer. The primer course only runs for 2 weeks, so it's just to give you a taste of what we're like, so that you can decide to go ahead and take up the standard if you're going to do that. It has 2 entries as opposed to, excuse me, the standard, which has got over 7 different entries in it. It's got about 4 exits compared to the standard, which has got over 20 different exits. And the reason we've got so many different exits, and a lot of them are, once you learn one type of exit, then it replicates throughout different areas. But the reason we've got so many different ones is, if you can remember back to Eusebio's charts, and if you're on the video, you can scroll back, you can see that we get in about halfway through the movement because we're trend followers, but then we exit almost right at the very end of the movement itself, so within about 10 or 15 pips of the movement. And this is because we've got so many excellent exits to warn us that, hey, this movement is almost over, time to get out. Okay, the profit acceleration is not included in the primer. This is the scaling in effects, where it is included in the standard. And as you can see, there's a massive increase in profit by being able to do that. On the money management side, the primer is still safe. It's still profitable, but it's much slower than the standard. Because the standard's got a lot more entry types, you can be in the market a lot more often. Whereas with the primer, some days you'll be just sitting there waiting for something to happen before it triggers up the correct setup. Like I said, the primer is still safe, it's still profitable, but the standard is much more profitable than the primer. Okay, both of them have homework, and both of them you'll be invited to the forum and practice sessions as they occur through the following weeks. And we've got videos from pretty much all the practice sessions if you want to go back through them. So there's about 300 or so there sitting there now. It's getting really up there. What else? I think that's about it. We do have all the other courses that are available. Craig has put together different packages which use primer, light and standard. So if you wanted to spend something like start right from scratch and spend 4 months to get yourself into go through all the training, then the primer, light, standard package is available. But if you are already aren't just coming into trading as a newbie, then I recommend that you just start the standard straight away. The standard covers up what primer and light do as well.
It seems that we have lost Chris for the sound. Just a moment.
Eusebio, rather than keep people waiting, would you like to go on through the slides as best you can there?
Yes, I will try. So I think that Chris has finished to present the different elements of the Max Standard and the Max Primer we are covering to you today. And so, in fact, so what you will learn with the Max is a very detailed and precise way to make your entries and your exits. Once we find a setup, this is always the first step. In order to open a trade, we have to find a valid setup, and remember, a setup is always defined under several types of conditions. The technical aspect or price action aspect, the risk aspect, and the global context aspect. Then we will execute the trade within 1 to 3 or 4 pips in a small time frame, possibly larger distance in higher time frame, because the price action is here essential to execute the entry. It's not because we have a valid entry setup that we will have necessarily an entry execution. And then similarly with an exit setup. All the training are made with the MetaTrader platform, the MetaTrader 4 for the moment. The MetaTrader platform is not necessarily the best platform, the best charting or trading platform, but it's adequate because it has no fees, it is a free platform, no data feed, and so minimal setup to install and so on. What we provide, of course, after each training session are the templates and the indicators we are using. Just to answer one question I have seen in the question area, for someone having come a little late. So we use indicators on our chart. That's true, but we don't trade the indicators. The indicators are just there. They are tools to help us to understand very quickly, in a visual way, very faster, when we have a potential opportunity. And I say a potential opportunity. It's the rest of the analysis which will confirm the validity of the setup. All the material is provided, so after the end of each session, sometimes 24 hours, this is for the video, for example, so we provide the video, we provide the PDF, the notes, all the examples, and so on, the chat transcript, because we have also a chat area where our students may ask questions and we answer, so templates and indicators. We have also these templates and indicators for other platforms, for example, NinjaTrader, for example, TradeStation, and some other platforms. This is the benefits we all get from our past Max graduates. Some of them have proposed, because they are using other trading platforms, to implement the tools we are using in the MetaTrader platform in other platforms, and so they are available for everyone. So, but at the end of each session, we provide all the materials we have used for that specific session. So, and the video comes 24 hours later, because each video is marked individually for each student. We do not want these videos to be sent in the nature, and so they are marked individually. This is why it takes time to produce them, and for that Craig is making a huge work to produce these videos and to send the videos. It seems that Chris perhaps is back.
Yes, sorry about that. My internet died.
No problem, Chris. So I have just explained this page of the slide.
Okay, so I'm just about to wrap this up. Like I was trying to say, before the interruption, one of the most important pieces of the Max course is the homework. This makes it become part of you. So it's not just another PDF or something sitting on the bookcase that you think you understand. This actually makes it, crystallizes it in your head. And we get to verify that you've actually understood it correctly, so that it's not like you're trying to learn something and you're not too sure if you've learned it correctly. As Eusebio would have said, after the course, we have the Max Forum, which you'll be invited to. There's a whole pile of videos and Q&A that you can ask in there. You can keep putting your charts in. It's pretty quiet, but it's still there. All the indicators are sitting there. We have practice sessions most weekends. Because we have different levels of the course, we tend to sort of, the more advanced people get invited to all the courses more often. The primers I try and get into once or twice a month at least anyway. And we also have, which will be coming up and which you'll be invited to, a thing called the News Watch List. It's on our web page. Oh, thanks, Eusebio. So if you jump on our web page, maxtradingsystem.com, and click on News Watch List, you get a list of all the major news items coming up through the week. And these are news items that we avoid trading. There's a whole pile of blurb at the bottom to explain what all those bits and pieces are about. But as trend traders, we don't want to be in a trade when the news comes out. This is because the market volatility can hurt your account, not the profit, but your account itself, and we don't want that. And we've also draw up a list of the top, out of the 28 major pairs, the top up to 14 of those pairs. Lately, the ranges have been quite small on the pairs, as you can see there. The smallest range is 58 pips per day, quite small. Compared to, say, for instance, if we look at the pound Kiwi at the top there with a nearly a 200 pip range or $1,300 movement every day, about this time last year it was around the $3,000 mark, and in the past it's been much higher. So these days the market is not moving as much. So if you're finding that things are a bit tough, they are. So you really, really do need some precision and a really safe way of trading to get around the place. So we provide this list that you can use each week. We update it once a week, just to keep you aware of what are the best movers. It's no good trading something like, for instance, a US yen or the Euro Swiss, which hardly move. You're not going to make anything out of it. So we go for the ones that move a nice amount. Just watch out for the spread though. If it's too large and you're trading a smaller time frame and you're making 20 pips and your spread is, say, 6 pips, like for instance a pound Kiwi there, then a third of your profit is just chewed up in the spread itself, let alone whatever slippage you incorporate. So you can sign up for that if you want. There's no charge to it, and every week I'll update the page, and I can also, if you sign up, just send you out a email saying, hey, it's been updated, and also watch out for these particular news items. Every now and then Eusebio will, and I mark it on that table there in magenta, will highlight a particular news item that he wants to hang around for because it could produce a really good movement. I don't think there were last week, Eusebio, but if you scroll down you'll be able to see an example of it from a previous week. There you go. So they've got the asterisks in front of the major. And we also delineate this, sorry, a bit of training here. We've got major items which affect the timeframes under the 4 hours, and then we've got major and H4 plus. So if you're trading the dailies or something like that, then you've got to be aware that the news of impact could affect even the daily chart if you're trading it. It could be that large. If there's a surprise in the news, a lot of the times, if there's no surprising news, then the price will just carry on through and won't jump around. But if there is a surprise and it's marked like that, then it can be quite major and can make things move a lot. As for instance, you'll see this weekend when Eusebio does his live trading for the non-farm payroll, generally that causes quite a kerfuffle in the markets sometimes, and it's been quite quiet lately. But just a reminder, you're also invited to Eusebio's live trading, like the non-farm payroll as well. We'll be sending all that information out too. Man, the months come around fast these days. Okay, thanks Eusebio. If we go back to the cheers. So after course, we've got a whole pile of stuff going on, and we try and keep as involved with you as possible. And you can write in and ask questions and send your charts in and let us know ask us questions about what you're happening, and we'll do our best to answer you. The end result from all this is that you get a really solid trading method, and we try and give you, like I said, as much support as you ask for. Trading is not easy. One of the questions that we've got to, okay, Guido, one of the questions that we get a lot is how long will it take? And that depends on every person. So it could take, some people have said it's only taken 2 or 3 months to get up to speed. Others have taken much, much longer than that. So everybody is different. And some people come into the courses thinking, I've been a CEO of a company, I'm a mathematics scholar, I'm blah, blah, blah. I should be really good at this. But it's a completely different thing to learn as opposed to regular business stuff. It's like coming in and learning how to sculpt or become an opera singer. It's going to take a while to get used to it. It's something completely different. You can't translate business skills into, a lot of business skills into learning how to trade. Yeah, it is different. Okay, but the bottom line for all this is that once you do learn it, and you don't need to make massive amounts of pips either, just a few pips every day, compounding will increase your account dramatically, but it will take time. However, it will let you achieve your goals. Next slide, please, Eusebio. Okay, so here's the pricing and the times. The Max Standard, our flagship course, is run on Sundays, New York time, at 4 p.m. So I hope that answers your question. And it runs for 7 weeks. There's also an extra bonus course at the end of it with Eusebio walking through some example charts. So it's 4 p.m. for 7 weeks, starts on June the 11th, in a couple of weeks really. The price is normally $3,000. The webinar special is $2,399. So the link is down at the bottom in grey, and it will be posted in the chat area, so no problems about that. And Craig has also put together a 3-course package deal as well for $2,679. So that package deal will take something like 4 months worth of training, just so that you know, 2 weeks with the primer, in 1 month, 3 weeks with the light the next month, and then followed by 7 weeks of standard course. And if you have problems with times, you can do all this by video. There's no problems with that. The homework and everything else still applies. So, okay, thank you. Next slide, please, Eusebio. And the Max Primer, the evaluation course, like I said, it's a short one. It runs for 2 sessions. It's just got a couple of entries in it. It'll give you an idea on what we're like. It is hard work. We don't slack around in it. There's a lot to learn. And if I'd known just what's in the primer when I first started out many, many years ago, it would have saved me a huge amount of money just because of the information that, not necessarily with the entry techniques or anything like that, but with the information that Eusebio has added to it on how to not get into bad trades. So times of day, news events, all that sort of stuff would have saved me a huge amount of money. Okay, so this one runs for 2 weeks, starts on June the 6th and finishes on June the 13th. And again, it's at 4 p.m. New York time. And like I said, you can do this by video if you want. The normal price is $329. The webinar special is $159. Thanks, Eusebio. And if you want to try out the 2 evaluation courses, and you can always upgrade later as well, there's no problems with that, then that's $759 for both of them. So it saves about $300. Once you've done the courses, we also have discounts. So if you're thinking of repeating to those maxes, just ask us. There are massive discounts. And once you've done enough of them, then you can repeat the courses at no charge. I should also say that if you take the standard course, then the light course, whenever it occurs through the year, you'll be invited to. There's no charge for retaking it. We want to keep you up to date. Like Eusebio said before, we are continually refreshing, reevaluating, changing the way we describe things in the courses, and we want to keep you all up to date with it. So we do that a bit in the scrolling parties and also in the light course as well. So you'll be, if you've taken the standard, you'll get invited to all the future light courses as well. So there's a couple of links there. Craig will be putting them into the chat area shortly. So they'll appear in the GoTo panel, and we'll also be sending it out by email. So next slide, please, Eusebio. Okay, so this is the page with both of those offers on it, the standard and the primer. Okay, and so 2 sessions coming up. For those non-maxes, there will be another giveaway in each one of those. So come along if you want a free evaluation course. And thank you very much for your time now. If you have any questions, please email us, or we're available by Skype a lot of the time. And yeah, thank you everybody for your time. Let's wrap up here. All yours to say goodbye to you, Xavier.
Yeah, I thank you, really thank you very much for your participation here. It's always nice to have some interaction, some comments, some critics sometimes, some questions. So, and we are always glad to answer and to exchange opinions. So thank you very much, and see you on the next side of the Max. Bye everyone.